All right, so I'm going to go ahead and get started. Welcome. My name is Hallie, and I'm a certified financial counselor here at Alive Credit Union. And today I'm going to be talking to you about credit, what it's on your credit report, what factors go into your credit score, and what are some things you can do to either improve or repair your credit. So, first off, I always like to start off with some words of wisdom. Today, I did choose the illustrious JP Morgan of JP Morgan Chase. He said, the first thing is character. And a lot of times when I was going through classes and school about credit in particular, they would say is the first thing in credit is character. And I had no idea it was a JP Morgan quote. So I think that's very interesting, but it is historically used to help make decisions on whether or not to provide lending to somebody based off of their character. Um, and then always Benjamin Franklin, he said, remember that credit is money. So we're going to go through real quick understanding credit and what's on your credit report, credit score factors, and then how to protect your credit. So what is the credit score? Credit score is a number that the lenders use to help determine credit worthiness. You are completely in charge of what your credit score is. It's a necessity for all of our biggest purchases and decisions in life to have credit. So it's up to us to make it what we want it to be. And every single decision that we make when it comes to how we use credit, what credit we use, how we're paying our credit, is going to affect that score. And that score is going to range anywhere in between 300, which is very poor and not able to get any kind of lending, to 850, which is perfect credit, which means you can basically do whatever you'd like. It is designed to give lenders a fast and accurate prediction of risk. So they don't want to put out too much risk, right? They want to mitigate that so that they don't have to deal with going through collections and all that. So, when you apply for credit, it's helpful to know what your credit score is so that you're prepared and ready for what the decision is going to be. Or maybe you know, okay, now's not the time. So, poor credit is anything underneath 579 points. That is going to be highly likely declined. Or if you do qualify, it's going to have a very high interest rate because, again, that bank or credit union is going to be interested in protecting themselves. Then you have fair credit. That's going to be 580 to about 669. You may be approved, but there's going to be higher interest. From 670 to 739, that's good credit. You're likely going to be approved. It's just going to depend. There's a fair interest rate, most likely. And then you have very good and excellent credit, and that's going to be anything that's over 740. Now, bear in mind that just because you have a certain credit score does not mean that you're going to instantly be approved, even if you have an 800 plus. Christy says different credit bureaus use different score ranges. That's correct. In one bureau, you could be a 750, and another an 800 plus. Yes, so we're going to go through kind of what the different bureaus do and how they make their decisions, but that's a really good point. It kind of goes and ties into what I was just saying. Just because you think that you have a 750 credit score, it doesn't mean necessarily that you're going to be approved because there's other factors that go into decisioning credit cards and loans. Especially mortgages. Think about all the different paperwork and all the different information they need before they make the decision. But depending on where you're seeing your credit score and what bureau they're using is going to affect what number you actually see. So if you're on Credit Karma, for example, that's a very popular app or website. You might see a more favorable credit score. So maybe it'll tell you that you have a 750 But if you pull Equifax, which can be a little bit more harsh as far as credit scores go, it's a little bit more up to date. So it's seeing every single one of those payments, then you may see a lower score. It's also helpful to know that different credit score monitoring tools, such as Credit Karma, are just a close estimate. They're not doing a hard pull on your credit every single month or every single day. So they're an estimate using their own software. So there's three different major reporting agencies, but in reality, there are thousands of them. The biggest ones are Equifax, Experian, and TransUnion. And these are the ones that you're going to see the most, especially when you're applying for auto loans, mortgage, personal loans, uh, even walking into a credit union to open an account. They're going to tell you, we're going to pull your XYZ credit report. Maybe that's a TransUnion, or maybe that's an Equifax. We use Equifax here at Alive right now. So what is on that credit report? There's 5 main categories. There's identity, summary, public records, credit history, and inquiries. And we're going to go through and really describe each and every one of these and how it affects your credit score. So on that identifying information is usually towards the top of your credit report. And this is where the financial institution that you're trying to get lending from is going to verify if your name, address, social security number, everything should match up with what you put on your application. Now, if for some reason you've recently been married or had a name change, they may ask you, hey, I see that there's a couple different names here. Do you mind sharing why? It's just that they're trying to understand and get all of the backstory prior to giving you lending. The same thing goes for your address. In fact, if you have too many recent addresses, sometimes that can be a little red flag where they say, okay, where are you really living? Especially if you think about it, if it's something where you need to have lived in the same area for a certain amount of time for that loan, they need to verify that that's really where you're at. Also, sometimes we miswrite things. So making sure that the date of birth and social security number match could be an accident or it could be a way to stop fraud. So the bank or financial institution, credit union can look at that. Yeah, so there are 3 major credit unions, but there's a fourth one that's gaining traction, and Novus. Yes, I've heard about a Novus, but there are smaller bureaus too. Yeah. All right. So in the summary section of your credit report, this is what you can think of as the snapshot. This can sometimes be found at the end of the credit report. It just depends on what kind of a report you're reading. And this is going to show how many delinquencies you have, if you have high credits, your available capacity. Available capacity would be how much you have available to spend from the credit that you're capable of spending. I hope that makes sense. So if you had 3 $5,000 credit cards and you owed $10,000, your available capacity would only be 5,000. So only 1/3 is available, which means you're a little bit over that threshold. And then, of course, your score. There's also going to be a section that shows your public records. So this is going to be collection items, either paid or unpaid, and it's going to state that. It's going to have, if you've had a bankruptcy, what kind of bankruptcy and what year it was discharged, if it was discharged. Foreclosures will stay on there. Tax liens can sometimes appear, and judgments. So sometimes I hear questions like, why do you need to ask about a bankruptcy? That was 7 years ago. But it is something that every single time a lender sees, they just want to ask what happened with that situation so that they can kind of understand and get to know you better so that they can judge, again, that character judgment that's based off of your past experiences. And another thing to keep in mind is how long these public records can stay on that credit report. So collection items, judgments, tax liens, bankruptcies, these can stay on your credit report for years and years and years. once they're on that report, that is something that they're going to take into consideration. Now, that doesn't mean that you're not going to qualify for lending. That doesn't mean that at all. If you have collection items, it might mean something to that financial institution that you paid them, as opposed to just leaving it unpaid. If you see something that's on your credit report that's not accurate, and you see something that says it's a collection, but it's not accurate, it wasn't you don't recall that, you can first contact that company by searching for the company and calling them directly using their listed phone number. And then after that, if that doesn't clear up the issue, you can always go ahead and dispute it through one of the three major credit bureaus. So another section that's going to be here is your credit history. It's going to show all of your past history up to 10 years, sometimes 15 if it is at tax lien, like we said. It's going to show the date that each account was opened. It's going to show what type of credit it was. Was it an installment? Was it revolving? Installment, again, is a loan that has a certain amount of payments. It has a term, and at the end of that term, it's over. A revolving credit doesn't have an end date. It's going to keep going and revolving. There's also going to be individual or joint credit. It's going to say whether or not it's you or if it's a shared. Sometimes that will affect loan decisioning as well. Balances on your credit lines, limits for your credit line, how many payments you've made, what the minimum payment is also there, and how well you've paid the account. Because if you've missed a payment by 30 days, 60 days, or 90 days, it'll all affect this report. It'll all reflect there. So the question here would be, why does it need to show that joint credit? I just co-signed with my daughter on this car. Why does that affect my credit decisioning? The reason why they look at that is as a joint signer on credit, even if you're not the primary, even if it's not your car that this credit is on, you are still equally liable for the payment. So if the other person couldn't pay that payment, you would be expected to make the payment. And if you couldn't, it would damage your credit history as well as theirs. So that's something to really keep in mind. And especially when we look at situations with relationships. So think romantic relationship, friendships, or family relations. We can pretty easily say, oh, yeah, I have good credit. You can use my credit. I'm going to joint sign on this credit for you. However, if something were to happen and this trusted friend, family member, or romantic partner for some reason can't make that payment, we have to make sure that we have the money to scrounge up and pay it. So that's something to really take serious and into consideration because it's going to be taken into consideration when the lender is looking at your credit report. So another section of your credit report is going to be inquiries. So what are inquiries? Inquiries are any time that you sign up to try to apply for something. If you go and you're trying to get a car at the auto lot, how many inquiries they send out, trying to see what your credit is so that they can provide you with lending. If you went and you're trying to get $1,000 personal loan, and first you went to a live, and a live said, I'm sorry, we can't help you right now. And then you went to another bank or financial institution, and then you went to another credit union and financial institution. And maybe you go to 3 or 4 or even 5 places here. And at that point, these are all hard inquiries. They're pulling your full credit report to look at it, to decision this loan. Those affect your credit score, and it's going to show where and when you had this inquiry. So if you say, oh, I really think that I need this money, and that many people have told you no, it may be time to ask and see if you can talk to a financial coach to see why. And you can always ask that too if you get turned down for a loan or credit. You can always politely ask and say, "Can you just tell me, based off what you saw or the notes on the account, can you tell me why I was turned down?" That way you have that really clear indication. Usually, inquiries isn't going to be a reason why your loan is turned down, but it does affect your credit score and it's going to be staying there on your credit report. So I just wanted you to be aware. Soft inquiries are things for pre-qualifications or promotional information. They're not a hard pull. Usually all it shows is a score, if that. And if you get a pre-qualification, they still have to do a hard inquiry to make sure that you're still a good candidate. So to minimize the impact of these inquiries on our credit, we just want to make sure that we're spacing out our applications and only really applying for credit when we need it, when it's necessary, when we've already done all of our research and looked at credit, and looked at the interest rates and looked at the institution and made sure that's where I want to do my lending from. That's when it's best to apply. If we just go right into it and we're like, "Ooh, I know I want a car. I'm going to apply here and I'm going to apply here and I'm going to apply here." Those can be things that hurt our credit. So, does anybody have any questions on what's on our credit report? All right. If not, I'm going to go ahead and get into our credit score. So, the FICO score is consisted of 5 different categories: the amount that you owe per credit line, how much new credit you have, length of credit history, the credit mix, and payment history. So, the number one factor in your credit score, and the reason why it's truly up to you what your credit score is your payment history. Payment history is 35% of your credit score. If you have a poor credit score right now and you've had a kind of rocky payment history in the past, your number one benefit is just waiting it out, using Father Time on your side, and making sure you're paying all of your obligations on time, maybe even ahead of time if you need to, scheduling those payments with bill pay or whatever means you need to make it happen to improve that payment history. It is the first thing that a lender looks at because they're going to think, is this person going to pay us back? How good are they at keeping track of their obligations and making sure they're paid? Remember, just a 30-day late payment, so just 1 month behind, can devastate your score. It can knock you down anywhere from 50 to 100 points, especially if it is something like a mortgage payment. It can really affect your credit. So making sure that we're very mindful of when and how much we owe for our payments and making sure that we get them out on time. Now, let's say that you have fallen a little bit behind. Let's go ahead, let's call up that lender and let's say, "Hey, XYZ has happened. Maybe you've gotten sick. Maybe there is a death in the family. You weren't able to make your obligations that month. Maybe you lost your job." And just letting them know, let them be aware, see if you can create some type of a payment plan to avoid collection. But if you do get into collection, it's not the end of the world. But remember that it can make a difference when somebody's looking and reviewing your credit history if you've paid off collections instead of just letting them go and walking away. And if you're having trouble and you know that you're having trouble, call your creditors in advance. So let's say that every single month your budget is extremely tight and you just don't feel like you can meet your car payment. And so you try to break it up. Maybe you pay half and then you're behind and you pay half and then you're still behind, but you're trying to catch up. So you pay half and a little bit more. You're never able to get out that cycle. If you know that that's what the situation is looking like, maybe something happened and some circumstances have changed, call them and tell them ahead of time, "Hey, I lost my job or I just lost somebody in the family. I'm totally strapped for money right now and I'm not going to be able to pay next month. Is there anything we can do to restructure my payments? And you can talk and just have an open conversation and stay ahead of it so that you're not dealing with the repercussions for the next 7 to 10 years. The second biggest factor is your amount owed. So 30% of your score is going to be affected by the average balance that you carry on credit cards and the ratio of what balance you carry to the limits that you have. So an example of this I've put here is if you had two credit cards and both of the credit cards had a $1,000 limit. If on one card you owed $1,000 and on the other card you owe zero, you're at 50% capacity. But if you said, you know what, I never use that other credit card. I never use it. That's why it's always at a zero balance. So I'm going to close it. Now you still owe 1,000 on the $1,000 line, which is more than we want to use for our utilization that we'll talk about shortly. But also it's changed our capacity. It's changed our amount owed to 100%. Now we can only get out 1,000 and we owe 1,000. So because we're at that max capacity threshold, it can affect our score up to 50 points. It's really unwise to close credit, even if it's something that you're not regularly using. You know, put a pack of gum on it or get your gas with this card only or whatever way you have to do it, just being mindful that we're not lowering our capacity amount because that's going to affect our amount owed. So next would be our length of credit history, and this makes up 15% of your score. This is why it's such a hack to help our children out if you have children by getting them started with maybe a secured loan right at 18 so that they can start building up that credit as much as they can. So what do they look at with length of credit history? Well, they look at the number of months in the credit file, the average age of installment loans, and the length of the oldest bank card or credit card. So what does that mean? That means that we want to make sure that we're not closing out accounts crazily, and we're going to keep that oldest card open for as long as possible. Even if it has a really bad interest rate because it was our very first card, we're going to keep that account open and we're just not going to focus on using it. So we're not going to apply for unnecessary credit. We're going to try to make sure we don't have a shallow credit history. So a shallow credit history means that yes, you have 5 credit cards and you're managing them all well, but you open them all up within the past 2 years. That's considered shallow. It's not a lot of depth to look at. Whereas if you have one card that you opened up 10 years ago and one credit card that you opened up 5 years ago, and you have an auto loan that you paid off, that you paid on time, and then you had another one 6 years later, and you're halfway through that one, you're seeing there's a lot of depth there. There's a lot to look at, and there's a lot of history where we can say, oh, okay, well, even 6 years ago, she was paying everything on time, or even 10 years ago, he was really consistent with his payments. This card, he's been able to keep active, and that's going to go into this part of your credit score. So then you have new credit, and new credit is going to make up 10% of your credit score. It's going to be affected again by those inquiries that we talked about. And part of the equation that they use for this 10% of the score is how many inquiries you've had in the past 6 months in particular, and the number of trade lines that have been opened in the last year. I also found it really interesting that Mississippi has the lowest average credit scores. Why Minnesota has the highest average credit scores. I just thought it was interesting. I didn't do any follow-up research on it, but I just thought it was an interesting tidbit. So then 10% of your score is going to be based on what type of credit that you have out there. So this is going to be the number of personal finance companies, the percent of trade lines that are revolving, trade lines meaning credit cards or lines of credit, and how many installment loans. So you want to have a balance here. You don't want to have a credit report that has all credit cards, and you don't want to have a credit report that only has auto loans or only has auto loans and a mortgage, and that's it. To diversify our credit, to make our credit as high as possible, as quickly as possible, we want to make sure that we're having a variety here. Maybe you do something like you have a line of credit at your credit union, and then you have 2 or 3 credit cards. One you use for travel, one you use for everyday grocery shopping, because it has good points or something. And then you have one that you don't really use. Having these kinds of things set in place as a game plan will help you get to that maximum credit score that you want. So it's also important to realize that the FICO credit score system was created so that while it is based off of your character, it's not based off of who you are. So things that cannot affect a credit decision and do not affect your credit score would be race, religion, nationality, sex, your marital status, age. As far as employment specifically, your salary, occupation, title, or length of employment, where you live, and any debt management companies that you've used currently or in the past. I will say with employment, of course, they are going to factor in on a decisioning process if you have been working somewhere for longer than 6 months, and they're going to factor in how much income you have because they need to know that to decision how much of a loan you can handle to pay. But for your credit score, your employment does not matter at all, which is good because these regulations were set up to prevent biased decisions. So I would be remiss to not take a moment to just advise you to protect your credit. Even if you feel like your credit is not in a good space, it's still important to protect yourself from fraud. So you're able to pull up to 3 credit reports per year at www.annualcreditreport.com. That was mandated by the FACT Act in 2004. So those are from the 3 biggest credit bureaus. So that is from TransUnion, Equifax, and Experian. So you could go on there and maybe at the start of the year, you could pull your TransUnion, and maybe in the summer, you could pull your Equifax, and maybe in the fall or winter, you could pull your Experian, so that you're just making sure that you know what's going on and you know what your credit's looking like, and to make sure that there's no fraud. So that's how you're going to monitor it for accuracy, and that is free. You don't have to set up an account with a company like Credit Karma or at a Life. We use an app within our online banking called Savvy Money that you can sign up for. It's also free, but again, it's going to have more of an estimation similar to Credit Karma. Whereas if you just go to annualcreditreport.com, you're pulling a real credit report. Another really important tip I find is freezing your credit when it's not in use. So if you're not planning on going out and applying for a loan, or if you're not planning on applying for a store credit card, you can freeze your credit when you're not using it. That way, nobody who's trying to do something nefarious can use it either. It's protected, but when you want to use it, you can just log in online or call ahead and unfreeze it for 24 or 48 hours, or you can just unfreeze it permanently, depending on what you want to do. Another kind of hack with that is it prevents you from those impulse decisions. You know, when you get to the checkout counter and they're like, do you want to open up a Home Depot card today? You can say, oh, I could spend more money today and get this credit card so I get the reward points and all this, but my credit is frozen, so I'm not going to make that impulse decision. Um, Now, if you still want to do that a couple days later, you've had some time to sleep on it and think on it, then you can come back once your credit's unfrozen. But only 3% of consumers had actually frozen their credit even after receiving a data breach notice. So really take advantage of that. That is a free service to protect your credit. All right. So with that, it has been 30 minutes. I really try to keep it on the dot. So remember that your credit union is here to help you with all of your financial challenges. Here at Alive, we have free financial coaching, which means you can sit down and maybe if your goal is to increase your credit score, you can review your credit report with you. Or if you want to talk about budgeting or saving or planning for your future, you can reach out to us for that as well. And then, of course, all of the normal banking services we can provide to you, of course.